Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here this morning while we follow along what's going on in the markets. For those of you new to our trading room, welcome. I hope you'll take the time to ask some questions or request some markets if you like. What you're looking at here is the Diversified trading system, and we call it the Diversified trading system because, well, we look at the market from three different points of view. We have a tool for whether the market is trending or swing trading or scalping. Here across the top, we have the Hawk Micro Scalper. This tool has been specifically programmed to pick up short-term scalp signals. Through the middle, the Falcon Swing Trader, and across the bottom, the Eagle Trend Trader. All the tools develop their signals the same way. First, we're going to get a warning dot along with an audio alert to let us know that a signal may be developing. And when the signal is complete, we get a triangle and a hash mark. That tells us it's time to make a decision. Now, you're going to see that we're not necessarily chasing every single signal. Rather, we're holding out for what we consider to be the high probability signals. And more on that as we go along. Well, actually, we're getting one of those high probability signals right now here in the Hawk. Give me a second to, don't run away on me, you sticker. This signal that's printing right now is known as the first micro-macro cross signal. Let me submit that order. The first micro-macro cross signal occurs when the micro line, that's this thin one, crosses over the macro line, that's the thick one. And we print a signal where everything is in sync. So we've got red bars, red signal, red trend lines, red filter. Now you can see the signal actually retreated a little bit and printed again. I'm looking to enter below the low just because of all these yellow bars that you see in here. One thing you're going to see on the Hawk Scalper when we print all these clusters of yellow bars, that is suggestive of a sideways market. People are always asking, how can you tell when a market's in chop? Well, with the Hawk, if we print all these clusters of yellow bars and the market's not going anywhere, there's a pretty good possibility that the market's going to be trading sideways. All right, they're going to maybe make another run at it here. The tool you see me using here on the right, this is the Trade Manager. I'm going to be talking about that a little bit more. But essentially, the Trade Manager has two components. It has this what we call the Profit Manager component. You see these blue dots that print? This is our tool that manages our stops. We've got 16 different stop strategies that we can choose from here. They're all customizable, so you can make them more or less aggressive, whatever you like. See how they change. And what would happen is once this trade goes live, the Trade Manager would use this particular stop strategy and follow the trade accordingly. So I don't even need to monitor the trade. You know, a lot of people are at a loss as to how to best manage a trade. Well, with the Trade Manager, and you don't need to worry about it because it will look after that for you. Perhaps even more important than that is this risk component down here. There's two modes for the Trade Manager. There's the risk percentage mode and the manual mode. The manual mode defaults to whatever quantity I've set up here. By default, it's one contract. But the risk percent mode will default to this value right here. So currently I've got my risk set at 2% of my capital. So what that means, we're just waiting for another signal here. So what that means is that regardless of where I place my stop loss order, whether I keep it loose up here or whether I keep it tight down here, the risk value really, it never changes. You see, it still works out to be about $400 per trade. That is 2% of my capital. You know, if you're trading a smaller account, say a $10,000 account, this would cap your risk constantly at 2% or $200. You can also preset as many as 3 profit targets and have a runner, and you can preset the profit objectives as well, or you can click for your profit targets. So if you want to set up a trade that looks something like this, the trade manager automatically gives you your correct position size. In this case, I've limited my risk to 2% of my capital, and I can also set my profit targets wherever I like. All right, so there's a real quick overview of those tools. All right, so that's the Hawk Scalper. Quick look here at the Falcon Swing Trader. Falcon Swing Trader, we pay a lot of attention to this trend line that runs through here. This gives us our directional bias. For the most part, we're also looking for confluence. In other words, we're looking for everything to be in sync. So we would look for a green trend line, green bars, green signal, green filter. And so there would have been what we call a trend change signal. This is actually what we call a late filter entry signal. Here the trend line does not change color, but the filter goes out of sync and then comes back into sync. This is also a very high probability signal. So here in the Falcon, you had 2 back-to-back high probability signals suggesting the market would rally. We're working another trend change signal now. You see the trend line has changed color. We're looking at the sellers trying to fight the market back. If it comes back here with a buy signal now, that will confirm the trend change signal. These horizontal lines that you see on here, this is the ultimate support and resistance suite. This is what we call a system add-on or a standalone indicator. It's not part of the DTS package. Obviously, you can add it on, or you can put it on any chart you like. You can use it on a 15-minute chart or a 233 tick chart or whatever you happen to be using. They are not floor pivots, and they are not Fibonacci retracements. In fact, they're much better, and I'd say that all modesty aside. We've got 21 support and resistance lines here. The gold line is your median line. The blue line above is primary resistance. The blue line below is primary support. So you can see right now that through the overnight, the market bounced off of the median line a couple of times and struggled with the primary resistance. Now that we're above it, again, it's suggesting that the market's going to perhaps be a little bit more bullish. All right, while that Falcon trade is setting up, let's take a look here at the Eagle Trend Trader. The Eagle Trend Trader has this trading band running through it. No, it's not an Ichimoku cloud. Yes, I know it looks like one. It actually kind of works in a similar fashion to an Ichimoku cloud. What we're looking for is we're looking for the market to give us a reaction when it encounters this hard edge. That's what we call the hard edge. And you can see whenever the market drifts into the hard edge, we do get a reaction. This is called a green bar sell. It's actually a very high probability signal for the Eagle. It's, well, green bars that produce a sell signal. And you can see how we had some nice follow through from there. Nice trend change signal here as the band changes direction. Nice trend change signal. Good follow through on that. So yesterday, a very good trending day. toward the overnight, a little more choppiness going on. The eagle producing a signal out of the open, which traditionally, well, we've been tracking this in the room for a little while now, tends to have some pretty good follow-through on that first signal out of the open. So we'll see how this morning's signal does. All right, so there's your bird's eye view of the three DTS birds. The market I'm watching here is the NASDAQ. I'm also following the E-mini S&P and crude oil, but please don't be shy. If the market is in my market mix and my data feed, I will pull it up for you. All right, so here comes that Falcon now. We've got the warning dots and the audio alert. We're likely going to print a signal. I'm anticipating that the signal is going to print here. Hopefully we don't get this kind of thing, 2 dots and then the signal. So you see this is actually going to be a late filter entry signal also. The trend line not going out of sync, the filter out of sync and back into sync. Come on. No, now the bar is turning red. And now it's trying to turn green. So a real struggle going on here at the moment between the buyers and the sellers. All right, here they come. Come on, get up there. Okay, so there's our signal. Our signal is engaged. You can see we've got our stops in play. Now, normally I would run our auto break-even trigger and our preset profit target, which I've preset down here. But because this is a demo room, I'm going to delete this and see if we can't run this up a little bit so I can show you how the stops work here on the trade manager. All right, so I'm going to enable these stops. I've selected the swing high-low strategy. I've got my stops automatically enabled. We're not going to see these roll right now until we make a new swing that meets these parameters here. But if the market gives us a little bit of room here, I'll switch into something a little bit more aggressive, perhaps something like parabolics or the bar high-low strategy. That's a very aggressive one. But right now we'll start with the swing strategy and we'll see, like I said, if we can't get the market to follow through a little bit here for us. Come on. Let's go. It might be a little bit of a quiet day today. I was actually surprised to see the market fall off as aggressively as it did yesterday. Of course, there's an FOMC announcement coming out later this morning. Well, this morning on the West Coast, in the afternoon on the East Coast. So the market could be non-committal until then. And, of course, the pending U.S. election. Could see a little bit of a run-up here, yes. Try to recover some of yesterday's range, maybe kind of, sort of. All right, so did you see the trade manager move my stops automatically from down here now to this swing low? See, so I don't even need to watch this trade. I can just put it away and I can look for other opportunities. In fact, we had, maybe I should have shown you this one here, the macro pullback signal on the hawk would have rolled already a little bit more. Our stops, I mean. So the macro pullback signal, quite, excuse me, relatively easy to identify. It occurs when the micro line, that's the thin one, goes out of sync, but everything else stays in sync. So we produce a signal with the micro line out of sync, but we still have green bars, green macro line, green filter, and a green signal. See, there, oop, it was there for a second. It was almost ready to produce another macro pullback signal. Those are high probability signals for us. We may be producing a consolidation pattern as well. Okay, Ranjit is asking about crude oil, and I'll pull that over in just a second. What I'm going to do is I'm going to hold my stop. No, I'm going to hold my stop back here at the original placement, just to give the market a little bit of wiggle room. It looks like it needs just a little bit of room to sort itself out. Okay, so Ranjit's asking, what kind of success do you have, or does the system have, with crude oil? Well, let's bring crude oil over here and you can see for yourself. So here's crude oil now on the hawk scalper. You can see we're still going to focus on the same high probability signals. So let's take the first micro-macro cross, for instance. That's when the micro line crosses the macro line. It's the first signal that is in sync. Now, I know you're looking at this and you're saying, well, wait a minute, Eric. The micro line and macro line are not crossing. How is that a first micro-macro cross signal? Well, it's the first signal that is in sync after the market is all out of sync. So if you look back here a few bars, you're going to see the bars are out of sync, the trend lines are out of sync, and the filter is out of sync. And then everything comes back into sync. That's what makes that a first micro-macro cross signal. And it's a very high probability signal. You can see that the market has some good follow through from there. This is now on the scalping tool. We had a macro pullback signal right here. We took a little bit of heat on it, not too bad. This is why we don't want to crowd our trade. This is why you'll see me place my stops a little bit further away to give the market a little bit of room, because occasionally, even though the DTS system is very good at picking up immediate momentum, occasionally the market's going to move against you a couple of ticks. So you don't want to get stopped out just because you jammed your stops in above this high. So the market gave you a little bit of heat, actually produced what we call a 3-arrow consolidation at the same time, which is another high probability signal, and then moved lower from there. So there's your hawk scalper. This is just on the overnight, mind you. If we go back the next day, this is around the lunch hour. We did get a first micro macro cross here. Did get high enough to find your scalp target, but not much more. Here's a nice first micro macro cross. So again, the micro line crosses the macro. This is the first signal where everything is in sync. You see, these signals here were not in sync yet. Our macro line was still gray. So everything comes into sync. Really good follow through. Here's another first micro macro cross. Here's another first micro macro cross. Again, this one gave you a little bit of heat before it started. Oh, no, here you go. Okay. All right, folks. Here's something that no other trading room moderator is going to show you. And I've got to go into manual mode to make this work, because I'm not going to be able to show you in risk percent mode. I won't be able to risk enough. Come on. Oh, shoot. Hold on a second here. Oops. Just one second here. Just got to do a little housekeeping. All right, that should be better. All right, where was I? Right here. Okay, first micro macro cross signal. Now, realistically, again, I don't ever recommend putting your stops right here. Why? Well, because the market may not get to your profit target. If we were running a break-even trigger, it would have forced your trade to break even, so you could have gotten out of here with a break-even stop. But let's say you weren't running the auto break-even feature, which you can turn on and off, by the way, and the market moves against you, you get stopped out, right? So what should you do? Well, ideally, I always recommend that you go above a fundamental point, like a swing point. But you see, the trade manager says, no, sorry, Eric, for your account size, you can't afford to do that at 2%. Now, generally speaking, anything less than 5% is considered prudent. So let's say I dial that up to 4%. I really, really, really want to take this trade. So I'm still containing my risk to an affordable amount, or something I can afford. Now, look at how much heat we take on this trade before it finally hits our profit objective. But the important thing is that you don't get stopped out. It's not a stop loss until it gets hit, right? Of course. So again, this is why it's so important not to crowd your trades. Everybody thinks, oh, if I keep my stops really, really tight, you know, and I only risk one contract, I keep my stops really tight, that's the key to success. Nope. Sorry, hate to tell you, it's not going to work. Because what ends up happening is you end up strangling your trades, and you end up getting stopped out. And sure, it's only $120, but the market eventually goes in your direction and finds your profit objective. So the signal was sound. You can see we printed another first micro macro cross signal, pretty much the exact same price. The signal was sound. The market just needed a little time to sort itself out. Now, I thought what I was going to show you here was a failed signal. I thought the signal was going to reverse and ended up going higher. The DTS system is a very high probability system. And this first micro macro cross signal, I hesitate to say it because it sounds like it's, you know, one of these spam emails you get, but it has a very, very high probability of success. To the, you know, like literally to the tune of being right 80% of the time. It's a signal that I'll take almost without exception. Like there have to be some really extenuating circumstances for me not to take a first micro-macro cross signal. And if I'm taking a first micro-macro cross signal that looks dicey, I'll still take it, but what I'll do is I'll dial down the risk amount. Maybe I'll only risk 1%. So if the signal fails, well then I've lost less still. But it's a very, very high probability signal. And that's just on the hawk. So you can see there was one here, another one right down here, which hit your scalp target but didn't go much further. And then, of course, we had just a plethora of signals here. So first, micro-macro cross, a macro pullback, a 3-arrow consolidation, another 3-arrow consolidation / macro pullback. And I realize I'm going over these quickly, but just to show you, the signals do have good follow through. Here's another macro pullback, another 3-arrow consolidation, another macro pullback. So the other day was just a free-for-all, is shooting fish in a barrel, or the trading equivalent of shooting fish in a barrel. All right, so that's the hawk scalper on crude oil. And yes, Daniel, I do believe we have crude inventory at the bottom of the hour. Yeah, see, Ranjit was just asking, and I hope I answered your question. He was asking, did you get stopped out on that trade to the upside? And this was the one that we were looking at right here. And that's the whole point, right? The risk manager is capping my risk. So if I want to set up the trade like this, the trade manager says, no, sorry, Eric, you got to pass. You can't afford it. And that's not bad. That's not a bad thing. I would rather miss out on the odd trade that works out rather than structure a trade ultra tight only to get stopped out for a loss. But like I said, I could have increased if I really liked the signal and I really wanted to take it. I just had to take it. I could adjust my risk percent. I could enter here, I could place my stop above the swing high, and I'd have to take a little heat on the trade, but it would eventually hit my profit objective. And you'll see this happen. You'll see this happen. You'll get a high probability signal, and all of a sudden the market starts to wander, and you think, oh no, what have I done? I'm in the wrong side. But the market will sort itself out, and like I say, this is an extremely high probability signal. The success rate it's such that you should count on the market finding your profit objective. In fact, it is such a high probability signal that if you get two bad first micro-macro cross signals, so you get a buy signal to buy it and the market stops you out. You get a sell signal, it comes back with a first micro-macro cross to sell, and it stops you out. There's every reason to believe that the market is not acting correctly that day, and it's probably a good time to get out. Maybe go golfing or fishing or paint the house or mow the lawn or do whatever. Do whatever you do when you're not trading. Okay, here's the Falcon swing trader. This morning we're working a possible trend change signal. Hasn't developed just yet. Now we're working a possible trend change signal to the downside, so it hasn't happened just yet. Through the overnight and from yesterday's session, we had a little bit of a trend change signal right here. See, the trend line went from green to red. And this is the first signal where everything was in sync. So you could have sold through the Asian session or toward the end of yesterday's North American session. held through the overnight if you were so inclined, and it looks like we're getting some decent follow through on that right now. But let's a little bit quiet there. Let's go back. Another trend change signal right here. You see the trend line changing color from green to red. The trend change signal always has this little characteristic pattern where we get the leg of the move that changes the trend line color, then we get the counter move. This is the buyers they're scrambling, trying to get the trend back, and then the sellers come back and they knock them down. See, here's the reverse. The trend line changes from red to green. Here's that push up. Here's the sellers scrambling to recover the trend, and then here come the buyers. So those are a couple trend change signals. Here's just your basic trend line touch signal. The market's in trend, comes back, touches the trend line, comes out, produces a signal. I've already shown you the late filter entry signal. Here's another trend line touch. Or pardon me, trend change signal that had some nice follow through. Extremely good trending day here. So we got the trend change signal, got a trend line touch signal right here, got another trend line touch signal here, got another trend line touch, oh, and a late filter entry. See, the filter went out of sync and then came back into sync, and we produced a signal. That's a late filter entry signal. Very high probability. Okay, so there's the Falcon for crude oil. Now we'll take a look here at the Eagle Trend Trader, and you can see again whenever the market intersects the hard edge of the trading band, we anticipate a reaction. So there's a very good reaction there. Another couple really good reactions to the hard edge. So you can see the Eagle Trend Trader producing some very nice trend signals. And another trend signal back here off of the hard edge. So there's the Eagle Trend Trader for crude oil. Ranjit says, I don't think I have what it takes to move my stop loss so far from my entry location. But that's why we're capping our risk at 2%. Right? What does it matter? What does it matter if you're bear with me here a moment. I know everybody's been told, oh, you need to get at least 3-to-1 or 2-to-1 reward for your risk, right? So what does everybody do? Everybody looks at their charts and they say, excuse me, I'm going to sneeze here, 1 second. Oh, sorry about that. Everybody looks at their charts, and I think the market's going to reverse here. So I'm just going to allow this trade to, actually, you know what? We'll enable the stops. I'll put that in. There we go. Okay. All right, so everybody looks at a trade like this and they say, oh, there's resistance up here. That's going to be my profit target. I need to get at least twice this for my risk, so I'm going to put my stop right here so I can get my profit target up there, so I can get 3 times my risk. Ooh, that's a good trade. Let's take that. And then they go in and they get filled and they get stopped out, and then the market goes on without them. Now, granted, this is an extreme scenario, but that's how most people trade, and then they wonder why they can't make a living trading. This is something that was brought home to me years ago by a broker friend of mine when I was just starting out trading, and I'm glad that he did. He said, "Eric, you're strangling your trades. Don't strangle your trades. Leave your stops further back." I said, "Matt, I can't afford it." And he said, "It's not a stop until it gets hit. Why would you strangle your trade?" "Well, Matt, because I'm risking $200 and I'm only making $100. Well, it's only $200 if it gets hit. Right? This is setting up your trade this way. It's a definite loss. I'm definitely going to lose $30. Oh, $30 doesn't sound like much, right? Well, if you do that all day long, it can easily turn into 100 or 200 or 300, especially once you start adding your commissions and fees, even with the dirt cheap commissions that we have now. So what should you do? Well, I'll show you what you should do, and then you can decide whether or not you want to do it, of course. You should only risk a certain percentage of your account. I don't care where you place your profit objective, but where your risk should always be contained. So go ahead, place your stop loss really, really tight. You're still going to risk 2%. So if I'm going to risk $400, which is 2% of my capital, remember, if you're trading a $10,000 account, this is only going 2% is going to be $200 of your capital. If I'm going to risk $400, why would I keep my stops ultra tight? If it's going to cost me $400 to be wrong, why would I not place my stop further away? And let me ask you this. Which trade has the higher probability of success? The trade with the stop right here, or the trade with the stop right here? Forget risk reward. We're talking probability. Which trade has the higher probability that it will reach the profit target? Well, intuitively it should make sense that the one with the bigger stop gives the market a lot more room to get to the profit objective, right? The one with the stop really tight, or heaven forbid, even within the market's recent range, has very little chance of getting to the profit objective. Now, like I said, the DTS system is very good at picking up market momentum, but what if you take this 4-arrow consolidation signal right here? This is a 4-arrow consolidation. It's a high probability signal. We have every reason to believe that the market is going to rally. Where do you want me to place the stops? Okay, come on, class. You gotta play. So I can place my stops at 47.55. I could place my stops, say, by this swing, so we'll say 47.53. So we got 55, 53, or we place our stops down here at 45. 55, 53, 45. Anybody going to play? All right. Thank you, Tom. Tom says 45. Anybody else? Really? Is Tom the only one who's going to play? Nobody else? Nobody has the nerve to say 55. That's what it is. Yeah, Tony says 45. All right. Well, for those of you who were thinking, oh, I would place my stops at 55 right below that little swing low, you saw me scroll the bar over, or the charts over, so you know the market gave you some heat before it eventually reversed and went higher. excuse me, I know it's uncomfortable placing a deeper stop. I know it is, but there is a small comfort in knowing that even if I place a deep stop and it gets hit, I have not lost more than I can afford. That's very, very important. And there's always a chance to adjust your stops as well if you have a deeper stop, like we did here with this trade. Now, this is very likely going to reverse and stop us out, but our stop started down here. The market has made a couple of attempts to rally. I've reduced my risk in half. So whereas my initial risk may have been $400, now it's half of that, so it's about $200. On the next rally, I can adjust it again. And if it doesn't rally, okay, I was wrong about the signal, but I've lost 1% of my trading capital, right? I started at 2%, I lost half that. 1%. You're not going to blow up as a trader if you risk 1% of your trading capital. It ain't going to happen. You'll have to be right 100 times in a row, or pardon me, wrong 100 times in a row, risking 1% of your capital. And even then, it would take longer than that, because it's a parabolic scale. But we won't get into that right now. I know, people have a hard time getting a handle on it, but like I said, then they wonder why they can't make any money trading. Then they wonder why the stats say 90% of traders lose money. It's because they trade like 90% of traders trade. If you want to make money, you need to trade like the 10% of traders that make money trade. And they do that by capping their risk at an amount they can afford. Now, just to double check, oh, yeah, my targets are on. I think, yeah, see, we hit our high probability target. I was trying to run this one out a little bit so that maybe I could show you how the trade manager automatically rolls our stops, but I don't think it's going to happen. You're going to see this a lot as well, where the market finds the high probability target and then reverses. That happens also. That's why these are high probability targets. But we'll see. If we get one more uptick here, we're still holding the primary, is that resistance? Yes, the primary resistance line. Might get one more bounce. I'll move then into the bar high-low strategy. That's really aggressive. And then you'll see it roll it. We'll go, say, 2 bars back. And you'll see it really roll the market or roll the stops aggressively. Okay, great question here from Michael. Michael asks, I can understand capping my risk, but I can't understand this having such deep stops with such small targets. Great question, Michael. It's all about probabilities. Trading is about probabilities. Do you know why everybody preaches, 2-to-1 reward to risk or 3-to-1 reward to risk? Because that seems to skew the probabilities in your favor, right? If you write it down on paper, it makes perfect sense. If half your trades are winners and half your trades are losers, and you make twice as much on your winners as you do on your losers, then it makes perfect sense. You'll be at break even at the end of the exercise, and no worse for wear, less commissions and fees. So if you make 3 times on your winners versus your losers, and you win on half your trades and you lose on half your trades, then at the end of the exercise you should be ahead of the game, right? So on paper it makes perfect sense. The problem is, trading is not like scribbling something out on paper. There's no guarantee you will win half your trades. Why is that? Well, there's no guarantee the market will move 3 times your risk allotment. Like, look at this example here that I just showed you. Okay, so this was the signal we took, this signal right here. It's our late filter entry / trend change signal. All right. So I set up the trade with my stop initially down here. Oh, so it looks like I only have 260 at risk. So I'm actually only going to end up getting stopped out for 0.5% of my capital. But that's beside the point. So I'm looking at a high probability signal. The market gives me some heat, and it eventually goes up and hits my profit target. All right. Now, if I set up the trade like this initially, and this is not a big risk trade, really, $260 for this little itty-bitty swing. That's not that big of a trade. But if I set up my trade like that, and now I need 3 times that. So there's 1, 2, 3. Okay, I went a little bit too high. It's going to be around 4,800, give or take. What is the probability that this trade is going to work out? Right, my entry is here, my stop loss is down here. What is the probability that trade is going to work out? Half of the time. Probably not that good. Why? Because my stops are so tight. So most people say, well, okay, I'll demand less of the market on the profit side. I'll keep my stops even tighter. And they just keep perpetuating the same thing over and over again. And then, like I say, they wonder why they can't make any money. So here we had a trend change signal to the short side after we hit our profit target here. So if you wanted to, you could look to short. I think we're going to see the NQ fall off a little bit here. But if you do that, go through your charts today, and it won't take you long to do, and be honest about it, but look at your signals and say, okay, here's my signal, and where's my stop loss going to be? All right, so let's say I put my stop loss right there. So I need to get 3 times that for my profit target. So there's 1, 2, 3. Okay. So we're going to set up like this. We're going to put our stop loss down here. Our profit target is up there. Well, here we'll go to manual mode because this is what most of you will be doing. Yeah, okay, that's about right. So you're looking at this trade and you're saying, ooh, wow, that's a great looking trade. I've got my 3-to-1 risk reward, and the market goes up, it goes up, it goes up, and it fails. So whereas you had all this profit, oh, where did we enter? We entered right here. You had all this profit for the taking. This was all your money. This was all your money. You could have easily put that in the bank, in your account. Because it did not hit 3 times your profit target, you took a loss. Making the market move 3 times your risk amount, even with a tight risk amount, you will have a very low probability of success. Now that in and of itself is not a bad thing. One of my most profitable months ever, I only had a 40% win ratio. So I was wrong more often than I was right. However, I was much more aggressive with my stops. I was lucky. I caught a couple running trades, so that helped increase my profitability, my overall profitability. But if you continue to trade this way, you will eventually bust your account. Even at $60, it'll be death by 1,000 paper cuts kind of idea. And I know you're looking at this and saying, oh, well, Eric, I would have rolled my stops up. Okay, that's all well and good too. So you roll your stops up, you get stopped out at break even. Let me show you how I would have done it. So I would have risked 2% of my capital. I would have had my high probability target in play. I would have entered here. At the very least, I would have risked to the crest in the macro line, but let's say we go down here. Okay, that's 2% of my capital, so I've capped my risk. But not only that, I'm maximizing my profitability. How? Well, first off, I'm running a high probability profit target. Secondly, the trade manager is automatically capitalizing me so that I max my profit on the trade. So you may have gone in with a single contract, you may have only had $60 at risk, and you may have had a $200 profit objective. I go in, my trade it looks like it's upside down, right? I've got $300 at risk or $360 at risk with a $100 profit objective, but the probabilities that I'm going to hit my profit target are very good. So the market comes up, bang, $100 in the account. Okay, very good. Where's the next signal? 4-arrow consolidation / macro pullback. Ooh, I got a chance to go in for 3 times. Okay, the signal never engaged, so I cancel it. Red bar buy signal, another high probability signal. So I'll probably go at least a couple swings back. So here once again, boom, $200 or another $100. Now I'm up $200 in the account. You're still in your trade hoping that you can get to your profit target. Or if you already rolled your stops to break even, okay, you're stopped out of your trade. Meanwhile, I've had 2 profitable trades already. So I'm already up $200 and you're still looking to have a winning trade. That's how you make money trading. And even if one of those trades have gone sideways, let's say the second signal failed and the market came down and stopped me out for the full amount. Didn't give me a chance to adjust my stops or anything. I got tagged for the full $400. How long do you think it will take me to make that $400 back trading this way? Probably not that long. 3 trades? 4 trades maybe at the outside? Or if I'm going to run my stops ultra deep, might take me a little bit longer, like if I always run my stops way down here, so I only have 1 contract and I got a $50 target. But again, it's the probabilities. What is the probability that the market will find my stop loss before hitting my profit target? Pretty remote, I'd say. Let's go here now to an extreme example. Okay, well here's the first micro-macro cross lower, but let's go, shoot, I can't even find a signal. This isn't a signal, but let's say we took this signal right here. And we put our stops way down here, say 47, 48. The market engages, and again, this isn't a signal, but I'm just trying to do this as an example. So our stops started way down here. And okay, we're going to pretend it didn't hit the profit target. And now we're sweating this trade. We're still not out of this trade. We still have a chance of hitting our profit objective. There is still a chance the market will reverse off 47.50 and go all the way up here to 47.67 and a quarter. There is a chance. In fact, there's some days where your sole objective should be to keep your stop out of harm's way. Just give the market a chance to get to your profit target. This is not a loss, folks, until it gets hit. I cannot overemphasize that. And even if this does get hit, It's still 2% of my capital. You will not blow up your account that way. I guarantee it. I guarantee it. You will blow up your account a lot of ways, but that's one way you will not blow up your account. You know, I'm a fairly clever guy. I've thought of a lot of ways to lose money. This is not one of them. Capping your risk and keeping a reasonable stop. And by reasonable, I mean, you know, look at a fundamental point in the chart. Look at a recent high or low, or I always recommend in the trading room that you go 2 swings back. So here's our first micro macro cross signal. All right, so there's swing 1, there's swing 2. There's the second high right there. There's a good chance the market will hit the profit target before it hits the stop loss. Boom, there you go. Money in the bank. Thank you very much. Where's the next signal? All right, so we're looking at a little bit of a reversal here. Again, the market may end up going a little bit sideways from this, and it may well end up going back to this 47.70 area that we've just been looking at. Oh, crude inventory in 5 minutes. That was 3 minutes ago. All right, so here's crude inventory. A lot of times we'll do the crude inventory on, say, the Falcon, and we'll use the OCO function. OCO, of course, standing for one cancels other. And I'm going to do it the NinjaTrader way today, where we've got this little bit of a zone. The market's kind of drifting sideways. I'm going to look to short below this line, and I'll go 3 zones. We'll go 1, 2, 3. We'll make our profit objective down here. And here's the top end of the zone, so I'll buy up here, and I'll go 3 zones, 1, 2, 3. So we'll make our profit objective right here. Now these orders are live the moment you put them on your chart. I could actually make this a little bit tighter if I wanted. It looks like the market's kind of respecting the primary support line a little bit. I'll also enable my, that's not what I want. Oh shoot. I'm not going to have time to readjust this. Sorry folks. I need to reload my, yeah, it didn't catch it. I need to reboot my trade manager. Sorry, I can't multitask. My bad. The market, well, I can't show you the parabolics. Here, 1 second. Well, now that the crude inventory report is out, you could certainly bracket to buy above this high, this little micro range that you have right here, and this little itty bitty swing low. So you could bracket 45.50, sell 45. I need to refresh that chart. Sorry about that. We'll put that away for now. When your chart acts, well, it doesn't act up often, but sometimes your chart will do funky things. So all you need to do is you can refresh your chart by going down here to reload Ninja script, or just hit your F5 button, and that will reset everything for you. It was too late with that crude oil play, but crude inventory is always fun to watch. Not always that much fun to trade. Michael's asking, do you scale out of position, or are you all in, all out? Most times I'm all in, all out. Occasionally I'll scale out, usually off the first trade of the day. So very often on the first signal of the day, because I'm looking for some market momentum. So let's say, well, I guess this was it right here, this first micro macro cross lower. I'll usually I'll change my profit objective to 0, so everything becomes a runner, and I'll usually try to run out that first signal. Or if I can take 2 contracts, maybe I'll take half on target, so take half on target, and then I'll try to run out the other half. That's usually what I'll do on the open. Hey, way to go, Tony. Nicely done. Tony says, Tony was trying to do what I demonstrated there, or Tony did what I was trying to demonstrate. Namely, he says, I had the OCO on both sides. So here we are, pre-inventory. And Tony said OCO orders to buy and to sell. He says, I was able to catch the rally on both sides, cut the rally up and the rally down. Nicely done. Yeah, so caught the tick up and caught the lay down. Well done, Tony. Knocking it out of the park. Occasionally, we can scale into positions as well. It's a little more, well, I don't want to say cumbersome, but what we would do is, say we went into manual mode, so it defaults to this value right here, and let's say we want to take this first micro macro cross signal, and let's say we're going to put our initial stop here. So we've only got 1 contract in play. We could manually, by right-clicking on the chart, enter another order here. And then as the market progressed, we could manually right-click on the chart, add another order here, and you could add in as the market kept moving in your favor. The trade manager would automatically adjust. It would keep adding to your stop loss, so you don't need to worry about, being short 3 contracts and only having a stop loss for 1. It will self-adjust, and then of course, like I said, once you have your stop strategy enabled, it will trail according to your stop strategy. All right, so we covered a little bit of ground here this morning. Unfortunately, I was gabbing and we missed this little bit of the leg lower, but we'll see. The buyers are starting to push up again. here on the Eagle. So there was that initial signal out of the open. Let's see whether we found our profit target on that one. Oh, look at that. Just kissed it. Found the profit target, and now we're into a reversal. We don't have a what we call a test of the extreme yet. The test of the extreme shows us that the market is starting to unwind. So the market comes up, comes down. We're looking for this part now. We're looking for the retest of the high and the failure. So the market's going to retest the high, come up short, and that will pretty much confirm that the sellers are in control once we get this failure up there. Okay, I think there's a couple more questions here. Okay, Tony, sorry I missed your earlier question. Tony's asking, is there a rule of thumb for the failed 4-arrow consolidation at 9:48? So that'd be 6:48 my time. Okay, so here you go, folks. So we have 1, 2, 3, 4 signals. This is what we refer to as a 4-arrow consolidation pattern. You can tell because it typically looks like a bull flag or a bear flag. Sometimes it will produce in a sideways channel. The idea is that the market will rally off the 4th signal. So there's the 4-arrow consolidation. Where did you place your stops, Tony? I guess that's what would be the big question. At the very least, I would say your stop should go here. And if that was the case, you would have been able to ride it out to get to your profit target. But as far as the failed signal, let's say the market never recovered and kept going lower, it happens. It's rare, but it happens. It's just one of those things, for lack of a better expression. All right, so it looks like we might be seeing that test of the extreme now, the one that I was talking about right down here. We might be seeing a little bit of a rally. Could also be a trend change signal. Don't know just yet. The market's in flux, trying to sort itself out. Yeah, Mark says the late filter entry signals aren't getting a whole lot of follow through today. Well, I think this one may actually get a little bit more follow through to it. But again, you know, there's very little structure here for us to hang a stop on. Honestly, it really demands a stop up there. As much as you don't want to do it, placing your stop anywhere else. So here's a late filter entry before I go too far. Trend line does not change color. Filter goes out of sync, comes back into sync. You're going to find that the late filter entries where the trend line it gets really, really flat are the ones that tend to have the best follow through. This trend line's got a little bit of a slope. Not that it negates the late filter entry. It is a late filter entry signal. You don't want to put your stop there. I wouldn't even put my stop here. It's only another 5 ticks past the tight stop. the very least, I think I would put my stop above the primary line, which seems to have a little bit of old support coming into it as well. That should keep you out of harm's way, but really the best stop is up there. What this allows you is, let's say the market retreats and tries to retest the primary line, which is a possibility. Let's say we placed our stop right here at the blue line. It's a very realistic possibility the market will come up, trade through the blue line by a tick or two, and then head lower. Because believe me, everybody knows there is resistance at 47.48.5. You can tell just by looking at your chart. Every trader who's looking at this NASDAQ chart knows there is some resistance there. So the market may well make a run to 47.60 before reversing and heading lower. So again, it's the whole scenario, don't strangle your trade. Now, if the market starts heading lower from here, we can take our stop from up here and we can start to roll it down. We can bring it down, we can allow maybe a super trend strategy to adjust our stops for us. And it will automatically move it down once the market recommits. So I think you're on the right side here, Mark. I honestly think the market's going to tail off here. Head back down to, where did we have some support from yesterday? Yeah, 47.40, 47.39.5, the median line, that seems like a very probable target to me. So I think the lack of follow through is just premature. Now, if you placed your stop right here, that's obviously too tight. You place your stop right above that swing. The market gives you a little heat, stops you out, and now is trying to head lower again. Same thing if you placed your stop up here. Still too tight. The very, very least, 47.60 and 47.69.70, even better. Well, yes, sort of. Russell's asking, isn't the Falcon producing a signal in in your bag now with the hash marks next to each other? I think what Russell is referring to is the double dot entry, which is the counter trend signal. So Russell's referring to this right here, I think. It's the double dot buy or the double dot sell. Now, I don't focus on this one very much because it is a counter trend signal. And usually what you want to do is you want to be able to tie it back into something in your chart, recently in your chart, and say, oh, well, the last time the market traded at this level, this is what happened, right? So here we have the same kind of scenario. So we produce a buy signal. It is a counter trend signal. You should go in very light on counter trend signals. The only good thing is that you know immediately when you're wrong, namely if the market trades back through this low. So right now you would have been stopped out and you could say, yeah, I was wrong about that. But yeah, that is a double dot buy, and like I said, I don't focus on it very often because it is counter trend. And if the market seems to have a trend or seems to be paying off in one direction, I will try to stay with the market in that direction. So here's that late filter entry signal now. And whereas our stop was initially up here, you could easily roll your stop now above this swing high. That would be probably a prudent move. And you can see we've reduced our risk from the initial 400 to maybe 125, 100, at the very worst, I think $150. Unfortunately, the market does not always make a beeline to our profit target. It's so much easier when it does. I encourage you, though, to try this on your own. The beauty of trading, of course, is that you can backtest these things free of charge. You know, take a look at your chart, and it won't take you long to do, but take a look at your chart and see how often you hit your 2-to-1 or 3-to-1 reward to risk, and how often you had open profit, whether it was $50 or $100 or even $200, and you didn't take it. They're struggling again. Yeah, here come the buyers. So we're going to see, here, I'll try a signal on the hawk. We're getting a green bar sell signal. We've kind of retested the lows here. We're up here shooting for the highs. So we've got green bar with a warning, or a green bar with a sell signal. Whereas this is a strong signal on the eagle, it's actually a signal that develops near the end of the trend on the hawk. So what I'll do is, once the signal completes, if it completes, I will look to buy the failure of it. So in other words, it's going to produce a signal to sell, and I'm going to look to buy above it. And again, because it's counter trend, I'll be able to cover my risk below the lows. I'll go in light. Okay, so there's the signal. I know the highs. I'm going to cover it below the lows. So if this signal trades now through 47.53, I'll get long. And here too, what I'll do is I'll delete the profit objective. And maybe we can run it out so I can show you how those stops roll. Bo's asking, what are the best times of the day to trade crude oil? Please quote Eastern time. Well, crude oil opens 9 a.m. Eastern, usually the first 2 hours. Usually. So that would be 9 a.m. to 11 a.m. Eastern. That tends to be when crude oil is most active. I miss the old crude oil market. Man, ever since the market took that tumble from $120 a barrel down to $40 a barrel, it hasn't been the same. It's trying to recover, but it's not that higher crude prices are the answer. That's not the answer, but crude oil used to make such pronounced ranges through the day. Now more often than not, we see days like this. It's just sideways. Well, here we had a decent fall off from the inventory report, but well, actually, I guess yesterday wasn't too bad either. But crude does seem a little bit sluggish compared to the old crude. All right, so here's the follow through now from that green bar sell. We're retesting the lows. We'll see if the market turns and tries to head higher. Or not. All right, well, I can close out that trade. If it comes back here and tries to challenge these highs, I can always buy back in, or I can look for the first micro macro cross higher. That would be a confirmation of that. yeah, Tony, good point. Tony says, on the old crude oil, you could be finished in 15 minutes, or crude oil could finish you in 2 minutes. Yeah, that's true. That's true. I forgot about that. All right, well, we'll put that back on the shelf. If you're going to be trading today, I think short is the better position to be in. Rallies might be a little bit sparse. And the market could be a little bit congested or constipated until the FOMC announcement this afternoon as well. So if anybody has any questions, please, by all means, ask away. Otherwise, I think we're going to button up the room for the day. Just give you hunt and peck typists a chance to get your questions in, if you have any. No questions? All right, you guys. Well, thanks very much for your attendance. I hope I helped answer some of your questions about the DTS system. We'll do it again next Wednesday. DTS owners, I will see you in the trading room again tomorrow morning. We'll talk to you then. Bye for now.